I'm sure. Well, first of all, we know that all this AI crap is fake, and they create a lot of these ads, and they create a lot of these statements, and they mimic. They've done them for the president. They've done them for Warren Buffett. Now, I don't think that gold investors are crypto investors, and they're not going to switch. I think you got gold to a point that it was so overbought that it needed a pullback. We got a pullback. So what? It came down 7 or 8% from its highs. The garbage that is out there, the unfortunate part of this artificial intelligence, that they can create these fake videos. All they are trying to do is manipulate the market for their own personal gain.
It was the first time publicly I said that I thought the bull secular market, or I should say secular bull market in gold, would peak out at $6,000 an ounce. And it really took off right after that statement.
Market strategist Bubba Horwitz and economist Steve Hanke recently addressed the growing noise around artificial intelligence-generated market manipulation, fake financial videos, and fabricated statements attributed to major investors. Both agreed that while AI has amplified misinformation online, seasoned gold investors are unlikely to be swayed. They understand real fundamentals. Horwitz noted that gold's recent 7 to 8% pullback was a normal correction after an overbought surge, not a sign of weakness. The long-term secular bull market, he reaffirmed, remains intact and could ultimately peak near $6,000 an ounce. Hanke added that despite digital speculation and short-term volatility, gold continues to represent monetary discipline in an era of reckless money printing. Their message was clear: stay focused on fundamentals, not digital distractions. Now we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I'm sure. Well, first of all, we know that all this AI crap is fake, and they create a lot of these ads, and they create a lot of these statements, and they mimic. They've done them for the president. They've done them for Warren Buffett. Now, listen, we went through this, if you remember Wall Street Bets, right? They went through this with silver. Years ago, they tried to pump down silver and talked about, because they try to create these gigantic short squeezes. And again, gold itself was going to sell off a little bit anyways. This video had nothing to do with it, and I don't think that gold investors are crypto investors, and they're not going to switch. I think you got gold to a point that it was so overbought that it needed a pullback. We got a pullback. So what? It came down 7 or 8% from its highs. The garbage that is out there, the unfortunate part of this artificial intelligence, that they can create these fake videos. All they are trying to do is manipulate the market for their own personal gain. Okay, so you can have, listen, it could have been, let's say it was the central banks who've been a big buyer of gold. They want to buy it cheaper, so they put out this statement. Again, I'm not saying anybody who did it, I have no idea who did it, but definitely it was done with a purpose. We all know that when there's money involved, people are going to do, the charlatans are going to do what they can do to try to create a better opportunity for themselves. This is criminal. They do belong in jail. They have destroyed a lot of people's wealth, even with this little bit of move, because a lot of people invest a lot of their percentage of their portfolio, and we're buying at the $4,400 level in gold, and they might not be able to hold it. So this is a criminal event that has to be stopped, but this is the problem when you have artificial intelligence and you're pushing it without really figuring out what the true power of what it is. As you and I talked last time, I thought we could get to 4,500 this year, and we did.
Yeah.
Again, it's hard to read from where we are here. One of the problems we have is a lack of volume, but certainly neither would surprise me. A big rally, I wouldn't say by November, that's 2 weeks from now, but if we could get to 5,000 by the end of the year, is it possible? Yeah. Listen, we're up 56% this year. Another 20% or another 15% would not be shocking. Okay, I think that there's a greater probability of a pullback, a continued pullback, and not because there's anything wrong with the gold. When markets get overbought, when people get over leveraged, when the FOMO finally wears off, people wonder where their capital is. It's like any other market. When they get overbought, they're normally going to pull back, and we're certainly, we got to about 5 or 6 standard deviations away from the mean on gold, which is too far. It cannot exist at that pace of going up. There's not enough money to continue to support it. We just saw it in silver. Silver ran to $54 almost, all-time new high, and pulled right back to 49, 48. Look, you expect pullbacks. You can't go into a market thinking that it's going to continue to go up. You get these big dramatic up moves, 56%, what is it, 70% in platinum and 80% in silver. There's going to be a pullback. Don't worry about it. Use that as a buying opportunity. Look, precious metals have not changed, and with central banks participating in buying them, that's telling you that we need to have that as part of everybody's portfolio. I think they're going to continue to buy for the foreseeable future because what they're really telling you, Danny, is our paper money, our fiat currency globally is worth toilet paper. Okay, it is worth nothing. And that is hence the reason that they're accumulating hard assets, because hard assets hold value and they're not a debt to the government. The government's not borrowing money. You're holding a physical asset. And that's what I think they're realizing, the damage that they've done with their, we're not going to call it money printing, their debt creating, their inflation creating policies. Okay, so they're now collecting and accumulating more gold to help protect themselves. I don't know, but I know that Besant would like to see something more of a gold standard or a Bitcoin standard, or something, an underlying asset that controls the dollar, that values the dollar like we used to have before Bretton Woods. Again, I think one of the problems, and I think what we've seen in this country since the end of the gold standard has been not really, really good. I mean, you look at 1985, which is 10 years past Bretton Woods, but the average income was 25,000, the average house was 75,000. Today, the average income is 70,000. The average house is over 500. So the ratio is not good. The damage that they've done with the fiat currency system without any underlying asset has ballooned many asset classes out of control, because people just trade the interest rate and the money. They're not really buying a house. They're buying the money. That it's a buy the month society. So I would suspect that central banks will continue to accumulate, and I would suspect that at some point that Besant and Trump are going to try to get some kind of underlying asset to back the dollar.
Todd Bubba Horwitz addressed the recent volatility in gold markets, linking it partly to the growing problem of AI-generated misinformation, fake videos and statements aimed at manipulating investor sentiment. He explained that similar tactics were seen during the Wall Street Bets silver episode, where false narratives tried to influence retail traders. Despite the noise, Horwitz emphasized that gold's pullback, around 7 to 8% from its highs, is simply a technical correction after an overbought rally, not a structural issue. He remains confident in the long-term bull trend, noting that central banks continue to buy precious metals as a hedge against the decline of fiat currencies. Their actions, he argued, are a clear signal that the global monetary system needs absolute asset-backed stability again. Let's get into the interview.
Was the first time publicly I said that I thought the bull secular market, or I should say secular bull market in gold, would peak out at $6,000 an ounce. And it really took off right after that statement. Now, I know correlation does not imply causation, but it did seem to be correlated. So I'll give myself a shout out on that. So I haven't changed my view at all. And a lot of people say, well, how do you come up with that number? And if you look at past bull markets in gold, particularly focusing on the 1980 bull market, it peaked out at around 10%, the price of gold about 10% of disposable personal income in the United States. So that's a back of the envelope kind of calculation. And now you have Goldman and all kinds of other banks coming up with other scenarios and other ways to come up with a peak number, and those seem to be coming in around 5,000, something like that. So the question is, well, now we've had a big correction. I'd say a maxi correction. We're now on. We're talking. What are we? The 22nd today?
Yeah.
So 22nd of October today, just for the record. And gold is now trading, it's a little bit over 4,000. Let's see, what is it? I'm just looking up. As I speak to you, it's 4,050. So it's pulled back from the highs. But this gets into, well, is this a buying opportunity? Well, the big pullback, it is a buying opportunity, but when? And right now, I look at the Hanke Todd Horwitz gold sentiment score, and the way we get those sentiment scores, Jesse, we text mine the articles that are coming out on gold every hour and determine whether those articles are bullish or bearish, and then develop a score based on those text mining measurements. So it's very high frequency data. It's hourly data. And what you find now, just looking at the readings this morning, Eastern Standard Time, the range goes from -10, that's the most bearish reading. That would be very extreme, which you never get there, but you potentially could get there, or a maximum bullish position +10. And we're getting readings now. The 9 o'clock reading was -2.6, then 9:30 it was minus about 1.17, and then it went positive. Actually, at 10 it was actually positive 0.326. And then it goes negative again at 10:30, -3.7, and then 11 at minus, not quite as much, 2.1, and 11:30 was the last reading I was obtained. It's about -1. So that's telling you it's consolidating, but kind of in it with a little bit of a bearish tone. It's not reaching an extreme, and an extreme. The buy is when it does reach the extreme on the bearish side. You know that a reversal is coming, and so I would say if we reach -4, -5 in that zone, something like that, I'd certainly want to be buying, because a reversal always occurs at these extreme points. So right now I'd say the market is still consolidating and with a bearish tone, shall we say, but we'll just wait and see. Keep watching those measurements. That's why the Hanke gold sentiment score is so important. It's important for high frequency trading and that kind of thing. But positioning and getting into a market, if I conclude that the secular bull is all intact, there's really no problem, and we're going to 6,000, and we've had this huge pullback.
Steve Hanke wrapped up his analysis with a data-driven perspective on gold's ongoing bull market, reaffirming his long-term target of $6,000 per ounce. Using historical benchmarks, he explained that previous gold bull markets, particularly the 1980 peak, topped out when gold reached roughly 10% of U.S. disposable personal income, a metric that aligns with his projection today. Despite the recent pullback to around $4,000, Hanke views this as part of a healthy consolidation phase rather than the end of the trend. He pointed to his proprietary Hanke-Kaufman gold sentiment score, which text mines real-time news flow to gauge market psychology. The readings currently show mild bearishness, signaling the market is stabilizing before its next major leg higher. For patient investors, Hanke believes the genuine buying opportunity emerges when sentiment hits extreme pessimism, right before the next major rally. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.